cap companies.
Tom,
So you have to go slower on the Fed funds rate. And we think that's the path the Fed should be following.
Tom, what they should do and what they will do are two very different things. Did you hear
Absolutely.
from Fed Chair Powell that he would be more willing to be aggressive with the balance sheet and take it slow on the Fed funds rate?
Yeah, that's what I'm hearing when I hear Powell speak, but that's not the message that we're getting from the broad FOMC. And that tells me that there's disagreement, whether that disagreement is along political lines or academic lines. I get the impression Powell wants to go faster with the balance sheet. Obviously, Bullard does as well. And I get the feeling that the market believes Powell doesn't have the votes right now. And that's why the equity market has rallied this week. And that's why the curve has remained flat, because the markets are saying you don't have the votes right now to be more aggressive with the balance sheet.
Tom Titouris of Strategas, thank you. If you are just tuning in on TV and radio, this is what happened about 40 minutes ago. So St. Louis Fed President Jim Bullard came out with an explanation for his dissent earlier this week. You'll remember he dissented against the call for a 25 basis point hike. He wanted 50. He wants immediate reduction of the balance sheet. That process should have started for him, at least, Lisa, this week, at least implementing the plan this week. And he wants the Fed funds by year end at more than 3%. So whilst Tom might agree with him on reducing the balance sheet, I'm not sure he's quite with him on where Fed funds should be in Jim Bullard's mind by year end.
And he said that perhaps Fed Chair Jay Powell would agree with Jim Bullard on the balance sheet, but not so much on the Fed funds rate. You know, we were talking during the press conference, John, about how it seemed to be, Fed Chair Jay Powell seemed to perk up when he was asked about the balance sheet. He wanted to talk about it, and I wonder if it's because of exactly what Tom was talking about, that he would rather see them rely more on that reduction than some of the other tools.
Just going through some of the dates next week, the 21st of March, Fed Chair Jay Powell speaking at an event, and then on the 23rd, he takes part in a BIS panel on innovation. So you'll hear from him a couple of times next week. It's his chance, Lisa, to tell us what he thinks, his view, his opinion.
Yeah, and perhaps what he emphasizes after a press conference that seemed to send a different message to everyone depending on what they wanted to hear.
Isn't that always the way?
For everything.
Backfill, cherry pick your data point. This makes sense. Stocks are up, so therefore he must have said. Futures are down 0.6 this morning. Good morning to you all. We're down 0.7 on the NASDAQ. From New York, this is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Ritika Gupta. A top aide to Ukraine's President Zelensky says the aim of peace talks with Russia should be to stop the fighting now. Ihor Zovko spoke to Bloomberg's Maria Tadea.
If you have the serious diplomatic talks, you immediately implement the ceasefire. Just to remind you, when they started the first round of negotiations on the level of delegations, they promised to have a ceasefire. That was not the case during the first, second, third, and already fourth round of negotiations. Yes, ceasefire should be implemented immediately.
He says that the lack of a ceasefire shows that Russia isn't serious about finding a diplomatic solution. And U.S. intelligence experts warn that Vladimir Putin is likely to make threats to use nuclear weapons if Russia's invasion of Ukraine drags on. That's part of a summary of worldwide threats from the Defense Intelligence Agency. The report says that Ukraine's continued resistance would drain Russia's conventional military strength. And in China, President Xi Jinping has pledged to reduce the economic impact of his COVID fighting measures. That signals a shift in strategy that has minimized fatalities but weighed heavily on the world's second largest economy. Meanwhile, the technology hub of Shenzhen is easing its lockdown and will allow factories and public transport in part of the city to resume operations. And it was another glitchy opening for nickel trading in London today. It dropped by the maximum allowed 12% for the third day at the London Metal Exchange. The trading limits were introduced for the first time in the wake of last week's runaway price spike. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is an opportunity for President Biden to assess where President Xi stands. There's been, of course, rhetorical support or the absence of clear rhetoric and denunciation, or the absence of denunciation by China of what Russia is doing. The fact that China has not denounced what Russia is doing in and of itself speaks volumes.
And that's the issue right now for the US administration. Elisa, it's not what China has said, it's what China has not said. And perhaps not said earlier this week with a 7-hour conversation with Jake Sullivan of the administration going into talks between leaders later this morning.
Yeah, they say that they want to support Ukraine. They say that they are against war. They have not, or against the conflict. They have still hewed a pretty close line to China and to Russia. And the fear is that they're actually going to supply them. And frankly, get around the sanctions or give them an out for that.
Futures are down 0.7% this morning. Good morning to you. On the Nasdaq, we're down about 0.7% also. Treasuries rallying, yields falling, dropping by 3 basis points almost to 214. No drama there. Crude up about 0.25% to 103.23. This line from Blue Bay, Kaylee, earlier this week, I find this quote fascinating. We think Russia will be in the isolated wilderness for a long time to come. A regime change in Russia is probably a prerequisite for reinvestment for many, along with lifting of sanctions. That last line, Kaylee, is just phenomenal.
Yeah, and Tim Ash over at Blue Bay did actually a top live with our Damian Sassower about Russia default risk, whether or not it has any contagion effect within broader emerging markets. But the idea being that this is not just a near-term issue. It's not just about this week's $117 million coupon payment. This is long-term, because a lot of these sanctions put into place when a country becomes a global pariah, that takes a very long time to unwind, John.
Christian Maggio joins us now, the head of portfolio strategy at TD Securities. Christian, can we start there? With Saudi Arabia over the murder of Khashoggi, you remember people stepped back from Saudi Arabia and then they were back in Riyadh 12 months later. This feels different for a lot of people. Do you agree with Blue Bay there, that line, that Russia will be in the isolated wilderness for a long time to come? A regime change in Russia is probably a prerequisite for reinvestment for many.
Yeah, I think I agree with that statement. The two situations are very different because the Saudi case was against one single person, while here we're talking about a whole nation, and I'm talking about Ukraine being involved. But there will probably be some money coming back. Probably some money will not leave at all. But the problem is, even when you remove sanctions, what's the reputational risk of being associated to a regime that by many has been considered to be a murderous and genocidal one?
So, Christian, what is the contagion risk to other emerging markets, given the fact that this isn't going away, certainly not in the financial world, for a long time?
Well, first of all, we see contagion right now through risk aversion and through commodity prices. Commodity prices were already on the upside, but they are definitely getting pushed much higher because Russia is a great commodity producer, energy, agricultural, metals. So that's not going to go away immediately because we have just too many supply side disruptions involved in this conflict. Then you can have a default, a Russian default that everybody's talking about, and that's another risk.
Well, but the market views that as a lesser risk today than it did yesterday, Christian, on the news that Russia sent that $117 million payment to JP Morgan, who then sent it on to Citi. We don't know where it went after Citi, and yet we've seen Russian CDS coming in substantially. Is the market being overconfident?
No, you're right. The point is, what you're talking about is two coupon payments that were due a couple of days ago. So they were already paid with some delay, which is not a very good sign. But we have numerous more coupon payments and redemptions coming due in the rest of the year and over the next 12, 18 months. So the 28th and the 30th of March, we'll see another couple of interest payments worth about $190 million. So the market will be, holding its breath for quite some time every time these payments come due.
Christian, in the meantime, I wonder how you think the global pool, let's say, of central bank reserves and the denomination of them is going to evolve in the coming months. If you were a central bank governor, a leader of, let's say, a state with questionable leadership in the eyes of the West, what you would do with your dollar reserves right now?
Well, you're quite right. First of all, I wouldn't want to be on the bad side of the U.S. That has weaponized the international reserves in a way of freezing dollar assets. The first point is, where do I diversify my reserves into euro? But the euro is also subject to the same risks. Then you can go into renminbi, but renminbi is not really a currency that you can just yet use for international payments. So it's a bit of a conundrum. Maybe gold, you can be in physical gold, but that's not as liquid as currencies. So wherever you go, the dollar is the global reserve currency, and for a good reason.
Christian, do you think that there still is a very real risk, going back to the Russian default scenario, that the payment could get stuck in the pipes? I mean, this has been something that we've been talking about. We really haven't seen this before. Are there bigger implications for this?
Yes, that's probably the biggest risk, because Russia has demonstrated to have, at least for now, willingness to pay. They definitely have the capability to pay until they drain the cash available in these frozen accounts. The question is it even a default if a payment doesn't reach the bondholders, not because the debtor didn't make the payment, but because there are restrictions and international sanctions? I think this is completely uncharted territory, and it will be very controversial, but the risk is very real.
Christian, we've got to leave it there. This is a fascinating conversation. We'd love to continue it with you. Christian Macho there of TD Securities. Isn't this the really difficult part of it all? Typically, we'd sit here. In a traditional sense, you'd sit here and you'd have two things. Do they have the ability to pay? Do they have the willingness to pay? Well, they have the ability to pay. They have the reserves. The problem is they can't access them. They have the willingness to pay. They want to access them and they want to pay. And Lisa, that's the complication for this. It's pretty unique looking back over situations like this, I don't remember seeing anything like this before.
No, as Christian was saying, this is unprecedented, this idea of having a deliberate cutting off of a nation from the global financial system. How realistic is that, given the ongoing tenures of some of the debt instruments currently out there? And frankly, we're seeing this with Citigroup. How does Citigroup exit Russia, given all of its ties, given the fact that it's a custodian for this type of asset?
This is why so many people, Kaylee, are uncomfortable with what we're seeing play out on the screens, big rally this week in the equity market, because they don't think we've fully realized the consequences of this. To fully price something, you have to fully understand it.
Yeah.
I don't understand it. I don't know many people who do.
It's difficult, if not impossible, to price this kind of uncertainty, John. And that's the point we got out of Goldman Sachs publishing this morning, saying that this is an equity market that looks quite sanguine, with substantial still downside risks potentially out there. And that's not just in terms of the equity market, but when it comes to the energy supply as well.
JP Morgan Investment Bank bullish. Marko Kolanovic, when isn't he? Great opportunities in high beta, beaten down segments that now include innovation, tech, biotech, and guess what, Lisa? Emerging markets.
Yeah, go in. Buy all. Honestly, this is sort of funny. I did laugh when I saw that headline. I thought to myself, really, when has he not been bullish?
Hey, two views make a market, don't they?
Yeah, my views and mine.
And Marco's on the other side of Bramo. Always. Futures down 7/10 on the S&P. From New York, this is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think we are facing clearly the biggest inflationary challenge we have for several decades.
These very high energy and food prices mean that some consumers, some households will be hurt.
The markets are pricing in tighter policy because of the boost to inflation.
As the time goes by and we see the consequences of a few hikes, the growth aspect will become more real.
It's going to be tricky for the Fed to pull this one off.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
60 minutes away from a conversation between the US and China. From New York City this morning, good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Lisa Abramowitz and Katie Lyons. I'm Jonathan Farrow. Futures down 0.8% on the NASDAQ, down 0.75% on the S&P. Those talks, Lisa, 60 minutes away.
Important to see where China really lies in this war. Can they necessarily continue to get behind Russia without deliberately saying they are behind Russia, or do they have to be more verbal about the fact that they want to move away and move closer to Ukraine and, frankly, the Western allies?
And Katie, going into it, a warning from Secretary Blinken earlier this week.
Yeah, that the U.S. will impose costs on China if they take action to support Russia in any way, basically in this conflict. But my question, John, is we've already seen talks between the U.S. and China, not on the leadership level, not on the presidential level, but as you brought up, Brian Sullivan was there to talk to them. And nothing really seemed to come out of it, or at least something did that warranted further conversation. But my question really is, can something tangible come out of these talks, or really any further talks at the governmental level? And that includes the G7 talks that the president's going to head to next week.
Well, clearly something happened this week which concerned this administration. Or Lisa, as we've pointed out, clearly something did not happen this week which concerned the administration. 7 hours of talks, reportedly, between Jake Sullivan, the National Security Advisor, and his Chinese counterpart. And we haven't heard a thing. What
we have heard from China, and this I think is very interesting, is a pretty hardline rhetoric about how NATO has escalated the conflict in Ukraine by giving some of the arms to Ukrainians. So basically, putting the blame all over the place, which is kind of not really divorcing themselves from Russia that much.
And the decision. He wants 50 basis points this week, didn't get it, only got 25. He wants Fed funds up by how much? He wants it up by more than 3% by year end, and balance sheet reduction already.
Honestly, I'm looking at this, and I think it comes down to how strong do you think the economy really is, right? I mean, honestly, this is some of the disagreement on the Federal Reserve, and we see that disagreement also in the economic data. If you believe that the U.S. economy is very strong, why not go to 3%? He points to ways that in the past it's actually worked. You look at inflation, it's at a very high pace. We already heard from the Fed that they don't see it as a transitory, and they actually see it remaining high for much longer during this year. So why not if they have that faith?
What you've just said is precisely where Morgan Stanley are at, and Zentner of the team. Katie, they said the following: this time we think peak rates will likely be higher. Higher inflation, stronger growth should allow for a higher peak and a longer hiking cycle. How much faith do you have in the economy? Yep. And how much space is there to get Fed funds up without damaging it? Chairman Powell seems to be on board with that view. At least that's what we heard in the presser earlier this week.
Yeah, that's what he indicated, saying the likelihood of a recession in the next year, the probability of that is not particularly elevated. But what Jay Powell and Morgan Stanley see is very different to what we've heard since that news conference. And I would point out Morgan Stanley also, separately from Ellen Zentner, saying today that, yes, the yield curve will probably invert when we look at 2s, 10s, but that is not going to be indicative of a recession.
That's what's incredible about this moment. The range of outcomes is really wide. The range of opinions is even wider. And Lisa, when you hear the likes of Scott Miner, Diane Swonk saying fanciful, fantasy land, looking ahead to the forecast of this Fed, to call them fantasy land, this idea that you can't do this with rates without damaging unemployment, you can't do this at all.
Well, what is the Fed's role in this? How do they affect lower inflation? It's slowing growth. right? I mean, it's slowing the demand function. That is where they are going at this. So if you're slowing demand, you're slowing growth, how can that not have a material effect on the fundamental economy, which is the labor market?
This week has been a big week for stocks. Equity futures pairing some of those gains. We're down 0.75% on the S&P. On the Nasdaq right now, negative 0.8%. Into Friday, through Thursday's close, the S&P was higher by almost 5%. Yields are lower by 3 basis points to 213.87, and crude 103.44, up by about 0.5%. Joining us now, Jim Paulson, the Chief Investment Officer at the Luthold Group. Jim, always great to catch up with you, buddy. Your line, and I want to start right here. My overall guess is that the stock market correction is over. Jim, what indicates that?
Well, you know, I'm nervous like everybody else, and I see all the issues we have, which is pretty plentiful. But I kind of think that if you just get away from the issues for a minute, I think we've been through a very conventional standard correction here. I think it started about a year ago when yields peaked in March of last year, and most markets over that period of time, S&P 500, Russell 2000, international markets. And now we've had an official correction here in the last couple of months, and that's right on time. If you go back about in the second year of most expansions, we have a period where the market goes flat and corrects. We did that in 83, 84. We did it in 93, 94. We did it in 2004. We did it in 2010, 11, all about at the same time, and they all lasted for about a year. That's where we are, and corrections have, it's done what corrections do. It took the concentration of leadership out of the market from new era tech stocks and reduced our dependency on a few handful of companies. It paused the rate route, which is now coming back. It revalued most parts of the marketplace pretty significantly, and it gut-checked sentiment. All sentiment majors are very pessimistic at the moment. But I think it left economic and earnings fundamentals fairly strong. And the combination of pessimism, which is really elevated, after about a year of going nowhere, and with strong fundamentals, I think is a buying opportunity for investors.
Jim, what you just said is possibly the most radical thing that I've heard all day, which is that this is normal, that what we're seeing right now is normal behavior in markets. It is hard for me to find the normal here, not only from the market behavior, but also from the exogenous risks and the exogenous effects, and the fact, and perhaps more importantly, that the Federal Reserve is not going to perhaps act as the put that they have in the past. How does that factor into your thesis that this is normal?
Well, almost every correction that I mentioned in the past, 83, 84, 93, 94, those were associated with periods where inflation started to pick up, yields started to go up, the Fed started to tighten. Very similar in that regard to what we have today. Now, we've added an additional exogenous risk with Russia. I think the big elephant in the room here is inflation. That is the issue. It's not Russia, it's inflation. And here's how I look at inflation. I look at it as made up of different components, and I think it's important to look at the distinctions. If I look at one component, which is the smallest part of inflation, it's Russia. And yes, it's having an influence, but it's a small influence relative to that 8% figure we have on CPI, and it's likely to be transitory. I mean, it may not be, but I think it will be largely transitory. The second component is we stimulated demand too much with overly aggressive economic policies, and that's got a chunk of what we're dealing with as well. But there's good news on that, because those same aggressive economic policies have turned decidedly restrictive in the last year. Real M2 money growth was 25% a year ago. It's 6% now. Real deficit to GDP ratio was 18.5% a year ago, March. It's 10.5 today. The 10 to 2s yield curve was 160 a year ago. It's 25 today, and the dollar's up almost 10%. So there's tightening in those policies, which should lower the inflation rate as we go through the rest of the year. And lastly, I'll just real quick, we're moving this pandemic to an endemic. And the real problem is the biggest chunk of inflation has been a supply side problem due to COVID restricting the labor supply. If that eases, we're going to see delivery times come down. We're going to see backlog orders come back to normal. We're going to see airline miles go up to normal. And we're seeing the labor force really start to move up in recent months as Omicron has come down. So I still think that inflation is going to moderate a fair amount, and that might slow the Fed's need to tighten and all those concerns that we currently have.
Jim, you mentioned the yield curve and 2s, 10s hanging in the ballpark of 20 to 25 basis points. The view from Morgan Stanley is that's probably heading toward inversion, but the equity market is going to be able to look through it to withstand it because it's not going to indicate a recession. Are you in that camp?
I will be concerned if the 10s to 2s inverts because it's been a good sign of past inversion. It won't be the only thing. Here's what I'd say about the 10s to 2s. If you go back to the 1960s and look at the 10s to 2s and compare it to the 10s to 3 months or the 10s to funds, what you'll find is the 10 to 2s and the 10 to funds was in the same place at the same time every previous cycle. That is, when the 10s to 2s was 25 basis points, so was the 10s to 3 months. That is not the case today. Today we got 150 basis points on the 10s to 2 or 10s to 3 months, and we've got 25 basis points on the 10s to 2s. I think that is telling me that the market's way ahead of it of discounting the actual yield curve of 10s to cash. The 10s to cash yield curve will catch up, but it might take the rest of this year to do that. And so I think the 10s to 2s might stay put as the rest of the yield curve catches up, rather than the 10s to 2s going to inversion. But that's just my guess.
Jim, I've missed you, mate. It's been too long. Thanks for being with us. Jim Paulson there.
Thanks for having me, guys.
Of the Luthold Group. Always appreciate it, sir. Just getting some headlines from the United States. We've got Wendy Sherman, the Deputy Secretary of State, speaking on a US TV network, MSNBC, saying the following: Biden will urge Xi to use influence on Putin to end the war. And then going on to say the US is collecting evidence on Russia war crimes as well. Of course, earlier this week, Lisa, the president calling Vladimir Putin a war criminal.
And this comes, of course, after we saw President Zelensky of Ukraine show that incredibly emotional video to Congress, showing the destruction and the murders of different individuals and basically highlighting the need for more action.
Hearing from the Deputy Secretary of State, Wendy Sherman, then, the United States will urge Xi to use influence on Putin to end the war. That conversation with China and the United States around about 50 minutes away. That phone call will take place. When we get the headlines, we'll bring them to you. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden will try today to persuade Xi Jinping into ratcheting up the pressure on Moscow to end the war in Ukraine. It will be his first phone call with the Chinese president since the invasion began. U.S. officials have tried to figure out China's position on the war. Beijing has avoided public criticism of Russia's President Vladimir Putin and offered rhetorical support for Ukraine. Russia's finance ministry said that coupon payments on $2 bonds are now with Citibank, and that means it has fulfilled its obligation to investors. The statement confirms those earlier reports that $117 million had been sent to Citi, which is the payment agent. Still, the S&P says the risk of non-payment either now or in the future, and it cut Russia's ratings once again. St. Louis Fed President James Bullard has explained why he dissented at this week's policymakers meeting. Bullard says he wanted the Fed to implement a balance sheet reduction plan and a 0.5 percentage point rate hike. He says he favors raising rates more sharply this year than any of his colleagues to above 3%. And oil is extending those gains after the biggest daily surge in 16 months pushed prices back above $100 a barrel. Crude is still set for a second weekly loss. A tumultuous period of trading saw WTI swing over $9 in just 3 sessions. And Energy Secretary Jennifer Granholm and Senator Joe Manchin will jointly announce a program to develop lithium batteries here in the U.S. It's part of a broader strategy to help Apache in the midst of a transition from coal. Lithium-based batteries are critical components of electric vehicles, grid storage, and weapons. Manchin State, West Virginia, has a huge coal industry. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people.
We are engaged in a conflict here. It's a proxy war with Russia, whether we say so or not. That effectively is what's going on. And for that reason, we've got to make sure we're providing as much weaponry as possible to give the Ukrainians the ability to continue what is a very
important comments there from Leon Panetta, the former U.S. Secretary of Defense from New York City this morning. Good morning. Futures are negative on the S&P, on the Nasdaq too. We are down by 0.75%, lower by 0.8% on the Nasdaq. We are 42 minutes away from a conversation, a phone call between President Xi and President Biden, and we understand from one member of the administration, speaking on U.S. TV a little bit earlier this morning, Lisa, that the U.S. hopes Xi chooses the right side of history. Joe Biden, the president, looking to urge the president of China to use influence on Putin to end the war.
What does influence mean? I mean, they've been trying this for a while. We've heard this in this sort of drumbeat to this event in terms of the hardening rhetoric. What will it take to push China into the corner to actually take a stance on this issue?
Fantastic guest to have that conversation with right now. Robert Blackwell, the senior fellow at the Council on Foreign Relations and Bloomberg opinion columnist. Robert, let's start here. How do you convince a foreign country of the responsibility that comes with great power?
Well, I don't think you convince a foreign country or most anybody else by hectoring them or constantly lecturing them. I hope the president will begin the conversation with Xi by essentially saying we have a problem here. We may see the situation in Ukraine somewhat differently, but we both want to first have a ceasefire and then find an equitable way to end this war. And I hope he'll start like that and not start with you're on the wrong side of history or with threats.
It seems like, Robert, we have a superpower on the global stage that has a very different interpretation of the responsibility that comes with power. And Robert, I wonder if this is something you see repeating again and again over time, or whether a situation evolves within China where they start to change their approach.
Well, first of all, I wouldn't put it quite as you did. China has a different interpretation of its vital national interests than we wish it did. And essentially, I believe the Chinese leadership thinks that the United States is determined to stop its rise, to contain it, if you will. And they see everything through, beginning with Xi, that optic. And so what we have to do, I think, is first of all, while of course remaining strong and resolute in defending our national interests, we have to try to persuade them that isn't the case. And that's the context in which this conversation will happen this morning. I would remark that yesterday, the Chinese government issued a statement saying they hope that this conversation, which will happen in a little over half an hour between the two leaders, will be an opportunity to try to begin the improvement generally of the U.S.-China relationship. So I hope that's, in fact, the perspective the president has, while, of course, making the points that China will, if it seeks to support Russia to get around the sanctions, will itself have a serious cost.
Ambassador, do you think that it's realistic for China to want to send weapons, to want to send military support to Russia?
Well, again, we don't know, I believe, whether that's actually happened. We have a leak from, or perhaps even an on the record from the U.S. intelligence community that Russia asked for such weapons. We don't, I think, have a leak of what the Chinese response was, but certainly if it makes a decision to supply Russia with weapons in the context of this war, it will be a further very serious blow again on U.S.-China relations, the most serious one in many, many years.
Ambassador, I noticed a line in one of your recent Bloomberg opinion pieces that really stuck out to me. Russia will remain a threat so long as Putin leads it. China will remain a challenge irrespective of its leader. That is a much longer term view. And how do you think the immediate need to focus on Eastern Europe detracts from a longer term strategic pivot towards China, toward Asia?
Well, my colleague Richard Fontaine and I wrote a recent op-ed for Bloomberg exactly on this subject. There was a bipartisan agreement in Washington, one of the few, one might say, sadly, that the United States should reorient its foreign policy toward Asia. That, of course, has been turned on its head by the recent events in Ukraine and the brutal Russian invasion of Ukraine. Now, I think, without any doubt, we're going to have to moderate that that pivot to Asia. It will be slower and less encompassing because we have to first stabilize Europe along with our allies, and that will mean more U.S. troops in Europe forward deployed into Eastern Europe. And we have to, I think, do more in the Middle East. Since the Obama administration, Middle East friends of the United States have been convinced we're leaving the Middle East. We have to disabuse them of that notion. And it's only if we can have stability in the Middle East and in Europe to a much greater extent than at present will we be able to make a full-fledged pivot to Asia.
Robert, just a final question from me, looking ahead to next week and the talks. You've been inside government many times. You understand the inner workings of events like this. Do you need to arrive in Europe next week with some deliverables for the President of the United States to meet with foreign leaders next week, and what do you think they would be?
Well, first of all, we have to see what happens between now and then, and Russia seems to be escalating. They attacked Lviv for the first time overnight. If that continues, and let's keep in mind the danger of Russian use of chemical weapons against Ukrainian cities, then obviously there'll be an escalation in our reaction. But I think the primary, in the absence of that, the primary presidential objective will be to keep this alliance together, and it's been remarkable. I think most people did not believe the alliance would act as resolutely as it has to this tragedy.
Yeah.
To keep them together and to prepare for next steps that Russia, Putin might take in order to further the destruction of Ukrainian cities.
They've been incredibly united. Robert, we're lucky to have you with us this morning. Thank you, sir. Robert Blackwell there on the talks between China and the United States. They begin in 35 minutes' time. From New York City, this is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Contagion, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The words of the US administration on TV this morning: China needs to stand on the right side of history. We are 30 minutes away from a conversation between President Biden and President Xi. Going into that, futures negative 0.6% on the S&P. On the Nasdaq, we're down by about 0.7%. Yields coming in a couple of basis points on 10s lease to 215.48. On 2s, very close to breaking 2% earlier this week and then backing away.
There seems to be also a lot of disagreement in markets based on that move that you're talking about on both ends of the yield curve of how much this economy can sustain in terms of inflation, how long inflation can persist, and how high rates can go at this point before you start to really affect a material downturn.
At the start of the year, I sat down with Mike Schumacher of Wells Fargo, and Mike came on and gave me his year ahead forecast, and he said 150, 160 by the middle of the year on a 2-year yield. And I said, Mike, really? That's high. That's a big move. We almost got to 2% earlier this week. Mike Schumacher, the global head of rate strategy at Wells Fargo, joins us now. Mike, have you been surprised by how much weight we've added to the front end of the yield curve? And are you surprised to some degree how easily we've shaken off some of the comments of this Fed this week?
I have been surprised, John. It's been just amazing, frankly, to watch the action in the front end of the U.S. And it's driven by so many factors: the Fed, other central banks to a degree, the inflation outlook. But the front end's been incredibly volatile. And sure, yields are up a ton. We thought they'd be up a bit, but they've blown by our expectations. There's not much doubt about that.
The curve is starting to get messy, Mike. 7-year yields above 10s. Saw a bit of that with 5s, 3s almost going there, threatening to do that yesterday morning. The yield curve is starting to invert. It's flatter at the long end. 2s, 10s, 23 basis points. 2s, 30s, let's call it 52, down 4 basis points today again. How do you think that evolves in the coming months, Mike?
It's flatter still. If you look at the forward rates, John, they'll price, let's say, 2s, 10s to be completely flat in 3 or 4 months, something along those lines. I think it could actually invert before then. We've been telling clients, you've got to think outside the box a bit here. This is an incredibly unusual situation. The inflation backdrop is unique in the last 30 to 40 years. It's possible 2s, 10s inverts to the tune of 50 basis points or more by the end of the year. But as far as the path forward, flatter, more painful for a lot of institutions.
So, Mike, a lot of people are wondering whether an inverted yield curve still means a recession. And I'll go a step further. Does an inverted yield curve in and of itself cause a recession, as we were talking about the potential earlier today? What's your view on this?
I'd say no to both, Lisa. So there was a very good relationship between curve shape and future economic growth, let's say, prior to the financial crisis. Since then, the central banks have been so active buying bonds, they've really broken that link. So the ability of the curve shape, let's say, to predict GDP growth out 12 months, 18 months, that's diminished a lot. So I wouldn't worry so much about the predictive power, but I think the second question is really interesting in terms of, does a flatter curve help cause a recession? And it probably contributes, in particular when you think about the financial sector. If your basic business is borrowing long and you say, well, what can I do? Or you want to borrow long, you want to lend short, or flip it around, you can't really do much if the curve is flat. So that intermediation function doesn't work very well. And I think that takes away a lot of profitability opportunities for banks and even for the shadow banks. So a flatter curve is tough for financials, and therefore it's tough for the whole system.
And there's also an additional yield curve that Tom Tsouras of Strategas, who was on our show earlier this morning, was talking about, that if you see the Fed funds rate get higher than that 2-year rate, that actually hurts the people who need it the most. And what you get is a causative effect on Main Street. I'm wondering from your perspective, whether you agree with that, whether you think the Fed should back off from raising rates as much as perhaps they're talking about and lean more heavily on the balance sheet.
No, I don't actually. When you think about let's say the inflation backdrop right now, it's terrible. And I think if you talk to most people out there in the U.S., and we all do this in our daily lives, inflation is everywhere. You can't really avoid it. So what the Fed needs to do, very simply, is step up and fight inflation. That's very abundant from an economic perspective. It's very clear from a political perspective. That's what the Fed needs to get done, is to fight inflation, put that genie back in the bottle. So it needs to raise the funds rate a number of times. It can't focus simply on the balance sheet. Balance sheet's a nice add-on, but it really has to lead with Fed funds, in my opinion.
Well, let's talk further about the balance sheet, with which Jerome Powell did not really get to do much on Wednesday. Maybe he will more next week when we hear from him twice. But he basically equated that runoff to the equivalent of a hike. How do you view it, Mike?
Yeah, I think the Fed struggles in terms of that equation. From my perspective, it's a little bit different. We may as well compare apples to bananas. Doesn't make that much sense. But what the balance sheet does, in our view, is really addresses risk appetite very directly. So if you think about the basic trade during the year of quantitative easing, it's pretty simple. When central banks buy more bonds, you're supposed to buy more stocks. That's worked really well. Now, if you flip it, you'd say, well, okay, if the Fed and other central banks are reining in the balance sheet, that's probably a pretty big negative for risk assets. So I think that stands out. The Fed can take some froth out of that market. The other thing I suspect the Fed and other central banks are trying to accomplish is to limit that yield curve inversion, limit that flattening. So if the Fed backs away from buying 10-year treasuries, 20-year treasuries, et cetera, you should, all else equal, see those yields go up. So that should help limit the downside from a flatter curve.
Well, if you say QT could be a sizable negative for risk assets, do you think risk assets are appropriately pricing that?
I suspect probably not. I think that when you look at the risk asset landscape right now, it's been driven primarily by the overall idea that, yes, central banks will tighten, that's a bad thing. And then secondly, of course, the big commodity spike. So balance sheet probably is number 3. And at least from my perspective, I think that the risk markets have not fully priced it.
So which risk market, excuse me, it is a Friday, is most underpriced for this potential risk?
Yeah, it's hard to pin it on one, Lisa, but when you think about risk appetite across the board, I'd say I would focus on the central banks that are most involved in QT. So the Fed probably leads the way, followed by Bank of England, Bank of Canada. So within those markets, whether it's high yield bonds or equities, tough to sort of parse those differences, but I would go to the dicier parts of risk. So within markets, do you want to focus on, or do you think the risk is more susceptible to the high end? I think it is the assets that typically are the higher beta, most likely to be most impacted by this cutback in the balance sheet.
The reason why I ask, Michael, is because there's a lot of disagreement about how much momentum there is in the U.S. economy to withstand the potential for 2.8% Fed funds rate, to withstand some of the rate hikes that you and others are saying is absolutely necessary in order to curtail what you see as dangerous inflationary pressures. So at this point, do you think that the Fed can actually orchestrate a soft landing at a time when there are diverging viewpoints and diverging data points underpinning the economy?
It'll be very difficult to pull off a soft landing. I think, Lisa, it was always going to be a challenge when you think about the massive amount of stimulus in the system over the last couple of years, both monetary and fiscal, the rebound from COVID, on top of that, the commodity spike. That's an incredibly big ask to talk about a soft landing. So it was always going to be tough. I think it's gotten much tougher. The chance of it happening probably is falling by the day. So is it 50-50? Maybe. It's probably not much better than that.
All right, Mike, we've talked about risk assets. We've talked about the bond market. Can I just get your thoughts quickly on the dollar, which in light of everything we heard from the Fed this week is heading for its biggest weekly decline since early February?
Yeah, we think that's a mistake. We're actually dollar bulls. And it's interesting. You can think about this from 2 perspectives. Really, if you look back over the last couple of years and also just over the last couple of months, the dollar has emerged as the top safe haven. So that should be a win if the Ukrainian situation intensifies, which seems likely over the next month or two. And secondly, if you focus on really one of the meat and potatoes types of things in FX, it's interest rate differentials. And I would say that at least from our view, there's more potential for the market to increase its expectations for hiking from the Fed than there is from the ECB, probably from the Bank of England. So that also should benefit the dollar. So we're actually very positive on the US dollar right now.
Mike Schumacher, thank you. Fantastic call earlier this year on the bond market. Mike Schumacher there of Wells Fargo. If you go back and find the clip earlier this year, it's just me asking questions, really. We're really going to get to 150, 160 when we're down near 1%. At least we got there pretty quickly. In fact, very quickly. 115 at the close the last time the Fed met before this meeting, and then close to 2% this week.
Remember when we were talking earlier this year, even at the very beginning of the year, could the 10-year yield actually get to 2%? I don't know. And that was a bold call to say by year end it would get to 2%. We're well through that. And now the question is, what is the cap, right? What is the point where it becomes self-limiting? And that conversation has changed. The narrative is we don't know what that cap is anymore.
Only 18 days into March. It's a long month, isn't it? It's felt crazy. March Madness, and I'm looking at my bracket. This is a basketball thing, stateside, which is my least favorite American sport, but I'm trying to participate. Katie Lyons, why are you crushing this? You're number 2 in this league. I'm looking at the results now.
I honestly, usually Virginia is in there, and usually my loyalty to the Who's indicates that I will always put them winning the entire tournament. They're not even in it this year, which breaks my heart, but it makes me think a little bit more logically about my bracket, and I actually put a little bit more strategy into it.
So who have you got winning this?
Wisconsin.
Wisconsin?
Yes.
I've got Gonzaga.
Most people do.
I've got myself beating Tom Keane at the moment, at least, anyway.
And I did not participate.
Why didn't you participate?
Because I don't know anything about this.
Neither do I. You think I do?
What did you do then?
I
How did you do it?
I outsourced this to my producer.
Okay, you outsource it. I don't
Jamie
have
did
anyone
this.
to outsource it to.
Jamie did this. Let's reset now and look ahead. So about
Please.
20 minutes' time. I could do that, Lisa. Don't worry.
Thank you.
Futures down 0.6 on the S&P. On the Nasdaq, we're down about 0.6% as well. We're 20 minutes away from a really important phone call between the President of the United States and the Chinese leader, President Xi. And Katie, it might take some time to find out what actually took place on that call, but it starts in 20 minutes.
Yeah, it'll be interesting to see when we get the readouts and if those readouts say anything decisive other than that they talked. Is the U.S. just going to say that it indicated what it already was going to say, that it's going to ask China to put pressure on the Kremlin to end this conflict? But we already know that Biden's going to say that. So I guess the real question is what news comes from this. It's likely going to be on Beijing's side if they give any indication of where they're coming down ultimately on this conflict.
The administration has been very open about what they think about this. Lisa, they're doing that again this morning. Secretary Blinken yesterday, Wendy Sherman today. Every nation must call on Putin to end this war. It's clearly what they want to hear in public from the Chinese government.
And then, of course, there's the question, even if they do, are we overstating China's influence over Russia right now? Are we overstating Xi Jinping's influence over Vladimir Putin?
Now, let me ask you this important question. Do you feel more rested at the end of the week when TK's not here for a couple of days?
Oh, you really? You're going to do this to me?
Do you feel more rested? Do you feel more relaxed? At ease?
Really?
No, don't
No, I
fancy
mean,
it?
honestly,
Not gonna bite?
I've got to be honest. This week, this year has been incredibly long, and it's not just for me, it's for everyone as we deal with all of the vagaries and the really difficult news flow.
TK texted me late last night. His flight was delayed by 5 hours. He's an unhappy man.
And you were crying for him, right?
I was not crying for him at all. Kaylee, great to have you with us in the seat. I know you're going to be with us early next week as well, so thank you. Katie Lyons, Lisa Abramis and Jonathan Farrow, Lisa Shallett of Morgan Stanley, 20 minutes away on Bloomberg TV. Looking forward to that. Futures lower. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A top aide to Ukraine's President Zelensky says peace talks with the Russians are going on, but the pace is rather slow. Ihor Zovka spoke to Bloomberg's Maria Tadade.
Expected, and definitely right you are, any talks ideally should take place in the terms of ceasefire, which is not the case currently.
And he says a ceasefire should be implemented immediately. U.S. intelligence experts warn that Vladimir Putin is likely to make threats to use nuclear weapons if Russia's invasion of Ukraine drags on. That's part of a summary of worldwide threats from the Defense Intelligence Agency. The report says that Ukraine's continued resistance would drain Russia's conventional military strength. And Moderna has asked for U.S. government approval of a second coronavirus booster for all adults. That covers significantly more people than Pfizer and BioNTech's earlier request for emergency authorization for those over 65. There's been a debate over whether repeated shots are necessary. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Omicron variant and the latest wave have an impact on not only consumer trends but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
NATO has a responsibility to prevent this conflict from escalating further. That would be even more dangerous and would cause more suffering, death, and destruction. This is President Putin's war. He must stop the war, withdraw his forces, and engage in diplomacy in good faith.
NATO Secretary General Jens Stoltenberg on this key moment of talks about talks, as well as the talks that are about 10 minutes away with Xi Jinping of China and Joe Biden of the United States. Lisa Abramowitz, Kaylee Lyons here, Bloomberg surveillance on this morning as we take a look at a softer tone to markets, reflecting after all of the whipsaw of action with respect to commodities and also a Fed that perhaps is more hawkish, even if the market hasn't gotten that message. Right now, let's turn to Russia and that bond payment that has been made. Maybe we're getting reports about that. Kriti Gupta looking into all things Russia with a chart of the day. How's it going, Kriti?
Yeah, we got to talk about simply these bond payments. That seems to be the highlight when it comes to can Russia actually make these payments. And for now, it seems like they are actually able to. The question is simply when are they going to hit the actual bondholders? But this shows up very clearly when it comes to the CDS. And that, of course, is my chart of the day. We're looking at those 5-year spreads. And you can see for our radio audience, essentially, it seems like a very muted timeline in the past 10 years. And this massive spike on the back of the invasion, which, by the way, has still been paired. But I think what's most notable about this chart is simply the fact that you are starting to see, even as the CDS spikes kind of come back down, they pair some of that spike. Compare that to the volatility in 2014 and 2020, and those look like child's play compared to the move right now. You are still seeing an implied 48% of default risk, essentially just based on these CDS spreads. The question is not simply can they pay right now, but can they pay in the long term?
Kriti Gupta, thank you so much. Can they pay? This is such an interesting question. They have the money to pay as long as they have it in their reserves, but will they be allowed to pay due to some of the sanctions and financial companies moving away from Russia? Damian Sassower always has answers, so he's going to answer all of our questions. He's Chief Emerging Markets Credit Strategist at Bloomberg Intelligence. What's the deal, Damien? They can financially, can they, on a sanctions and foreign relations level?
So they can pay. It's clear now that they're willing to pay. Yes, the U.S. Treasury might very well start stepping in the way of those payments come the 25th of May or even sooner than that, but that's not for me to decide. The question to me, Lisa, the key question, why would they pay? Why would Russia pay foreign creditors, dollar creditors, coupon payments when its economy is obviously crumbling and it's trying to wage this war in Ukraine? And for me, there are really three arguments, right? The conspiracy theorists would have you believe perhaps there's a lot of Russian holders of those bonds. Now, I don't put much stock in that, although I do not disregard it. There could be a heavy concentration of Russian holders there. The optimists would point to the timing, right? The fact that we were perhaps moving into de-escalation yesterday when they decided to make the payment, and so perhaps they were indeed looking to avoid a default. Now, I'm an emerging market fixed income strategist, and I'm also a New York Jet fan, so I'm a bear by trade, so I don't believe that. And then finally, and this is probably, my position here, it's the pragmatic position, it's the one that, if you look back to 2019, when the veil of sovereign immunity was pierced during the Crystal X versus Venezuela argument, basically the Third Circuit Court of Appeals here in the U.S., the Supreme Court upheld that decision, meaning Crystal X, which is a gold mining company in Canada, was able to lay claim to Venezuela's Citgo refining assets here in the U.S., even though they were owned by PDVSA. So does Russia really, right now, at this moment, given where we are in the world, want to have angry creditors accelerating the process against it? Probably not. So to buy a little bit of time here, maybe a month, maybe a little bit longer, is probably in Moscow's best interest, and that's probably what you're seeing here today.
All right, so if we're talking increments of days and months, what about the long term? Because as we're seeing Russia cut off basically from the global financial system, that's not something that unwinds overnight, even if you do get a resolution to the conflict.
Absolutely. So I stand by my call that effectively there will be a default. I mean, it's just going to be very, very challenging given all the blocks in place by U.S. Treasury, by Russia itself. I mean, Russia itself basically has said, listen, you can't pay, you can pay, you have to come to us for approval before you pay. What if they don't make it within a certain time period or grace period? I mean, Fitch in its statement actually said, and this is written down, they do not have access to the bond docs on the local bonds that they actually rate. So it's just madness. And last night, I mean, I'm not even going to go into it, Kelly, but people were speculating that Russia was attempting to make payment from a blocked sanction account to JP Morgan. JP Morgan realized this, and they were trying to unwind. So it's hard for me to kind of distinguish. And obviously the dollars, according to Critty, haven't hit bondholders' accounts yet. So we really don't know. But I would assume JP Morgan, I'd assume Jamie Dimon would not have allowed those payments to go through without first talking to the U.S. Treasury. So I have to believe that money's on the way.
Damien Sassower of Bloomberg Intelligence, thank you so much for taking the time. I do want to bring some breaking news to you, Kaylee. You were noting the Federal Reserve Governor Christopher Waller is speaking on a competing network talking about how the Fed should really favor front-loading rate hikes, should consider a 50 basis point increase at the next couple of meetings, and that would really like the Fed to be much closer to a neutral rate. You are seeing a big move on two-year yields as they shoot higher in response, now 1.95%. I do wonder how much he represents the consensus.
I think that's an excellent question, and how much does he or does he not run counter to the opinion of Chairman Powell? But while you're seeing that 2-year out 195, the curve getting flatter this morning, we're back down to 21 basis points. He's not just talking about potentially 150 basis point hike either, Lisa. He says it should consider a 50 basis point rate hike at one or multiple meetings. And that would put them maybe a lot closer to what Jim Bullard wants, which is potentially 3% at year end. I don't know if he'll get that, but obviously Christopher Waller is raising questions here.
Yeah, and what I really find interesting is the move in equities as well. And I do also take a look at the risk aversion. How come equities are not responding as much as bonds? We had this move, particularly in the NASDAQ, big tech, supposedly rate sensitive. We're not necessarily seeing the same knee-jerk response at a point when people don't understand the trajectory of the economy.
I think that's exactly right. I guess there's one argument to be made that if the yield curve is indicating that the Fed isn't going to be able to pull this off, isn't going to be able to move as aggressively as it says it is, does that actually then turn into a positive scenario for risk assets. Either way, it's hard to make sense of an S&P 500 with its best 3 days since November 2020 in the face of this and a war in Eastern Europe.
Yeah, and right now, ahead of the open, futures down 0.7 point on the S&P, NASDAQ down about 0.8%. Coming up, on Balance of Power on Bloomberg TV and radio, Gary Locke, former U.S. ambassador to China, about those talks about to begin in 5 minutes. This is Bloomberg.
BNP Paribas Open Update for Bloomberg TV and radio from Tennis Channel. I'm Jamie Maggio. Rafael Nadal continued his perfect start to the season as he took out Nick Kyrgios in 3 dramatic sets to clinch his 19th victory of the season. The Spaniard is looking for an incredible 92nd ATP Tour crown in the desert.
I just suffered in one game with my serve. So, well, Nick is one of these kind of players that you're going to have problems when he's motivated. No? So happy for the victory, of course.
On the women's side, defending champion Paula Badosa is just 2 wins away from retaining her crown after she blew Veronika Kurmatova off the court to reach the Final Four. She'll face Greek star Maria Sakkari Friday for a spot in the championship match. And don't forget, Tennis Channel's extensive daily live coverage from Indian Wells all starts at 1 p.m. Eastern. I'm Jamie Maggio.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
An important conversation just moments away from New York City this morning. Good morning, good morning. Futures negative 0.6%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue happening right now. Talks between President Biden and President Xi.
This is an opportunity for President Biden to assess where President Xi stands. There's been, of course, rhetorical support or the absence of clear rhetoric and denunciation or the absence of denunciation by China of what Russia is doing. The fact that China has not denounced what Russia is doing in and of itself speaks volumes.
As U.S. fears grow, China may support Russia's invasion. Secretary Blinken delivering a warning.
China will bear responsibility for any actions it takes to support Russia's aggression, and we will not hesitate to impose costs. We believe China in particular has a responsibility to use its influence with President Putin and to defend the international rules and principles that it professes to support.
The risk of escalation in Russia underlined by the Defense Intelligence Agency's new summary of worldwide threats, saying the following. As this war and its consequences slowly weaken Russia's conventional strength, Russia likely will increasingly rely on its nuclear deterrent to signal the West and project strength to its internal and external audiences. Team coverage starts right now with Anne-Marie here in New York City and Maria Tadeo in Brussels. AMH, let's start right here. That's the U.S. comment going into this conversation. What's the Chinese response?
Well, China has really rebutted all of this, and they have said that, one, they were not aware, tactically aware of the invasion before Russia decided to go into Ukraine. They've also said that they are against what the United States is saying in terms of sanctions. They don't want to be stuck in the middle of the crossfires of the sanctions, and they also are the ones that have been, and we have seen them really amplifying some of this Russian disinformation. So they're going into this meeting where the United States does see China potentially being able to move the needle, but while at the same time, they haven't come out and condemned President Vladimir Putin. They haven't come down explicitly and supported him, but it does look like they are in the background giving a little bit more weight to President Vladimir Putin. And in this meeting, leader to leader, really the question going in is what role Xi Jinping and China can play. And the U.S. want them to try to bring Putin and his troops back from the brink.
The question I have, Anne-Marie, this morning is what happened earlier this week. 7 hours of talks between the United States and China. It was Jake Sullivan and very little detail of what happened. Was it something that happened or something that did not happen that prompted this meeting, this conversation?
It's a great question. We know such little detail about this meeting. We know that from the U.S. side, they thought it was a substantial conversation. China as well had very similar rhetoric in their readout. But 7 hours, you have to imagine a number of issues were discussed. The United States is putting China on guard. One, do not let Russia skirt around the sanctions regimes that the United States and the West have put in place. And two, do not send weapons, including those very technical armed drones, to Russia. I imagine that was key in this discussion, and it's going to be key today when Biden sits down with Xi Jinping.
We've spent all morning having talks about talks. Maria Tadeo, Vladimir Putin had talks with Chancellor Scholz. Pretty clear who he thinks is to blame with the talks at the moment.
Oh, yeah, he blames the Ukrainians, and he say the Ukrainians and what they put on the table is just unrealistic, and they need to get real. They need a reality check in terms of a way forward that seems diplomatic between the two sides. The problem is, of course, every story, you have to look at both the Ukrainians and the Russians. And when I spoke to a very close member of the Zelensky government, a member of his cabinet who's very, very familiar with the talks, he told me the issue right now, of course, is that Russia has not ceased to open fire on Ukraine. And we have made it very clear, Ukraine is not going to give away everything for nothing. The first steps for serious talks is to engage on a ceasefire. That is not happening on the ground. It's 23 days of war. The other thing that is becoming also very clear in these conversations that we're having with officials on the record, but also behind the scenes, is that Ukraine does not trust the Russian Federation, and they do not trust Vladimir Putin. So they hint and signal that any peace deal going forward will have to have an international support. So that means perhaps the United States, perhaps potentially the European Union, even Turkey. So these countries are going to get involved. What they made clear is that in their eyes, a bilateral deal between Ukraine and the Russian Federation will carry no weight.
Maria, what can we achieve next week with the president flying into Brussels?
Well, if you ask me, very, very little. A lot of this has to do with showing not Ukraine, but the Eastern European countries, particularly, of course, the Baltics. This is about Lithuania, Estonia, Latvia, Romania, Poland, all of those Eastern European countries that feel threatened by what they believe is an increasingly aggressive Russia and Vladimir Putin. But when it comes to the actual war, when you speak to both the Russians and the Ukrainians, they make it clear this is a situation they have to fix themselves. This is a conversation that Russia and Ukraine have to have. And in particular, when you speak to Ukrainians, they tell you this war is not going to end until Vladimir Putin and Volodymyr Zelensky meet in person.
Maria, thank you. Joining us from Brussels, AMH here in New York City. She'll stay close through this hour. Joining us now, Morgan Stanley's Lisa Shallett, Economy's Peter Cheer, Colin Martin and Charles Schwab. Pete, straight to you. You said for the first time, peace talks seem credible. Why?
They do seem to be making progress, partly because Putin is bogged down so badly. They, attacked on too many fronts. They didn't have enough resources. They're having problems with supply chain. So I think we went from a glimmer to realistic, but I would still say that's 50-50. He tends to use this tactic, right? He lulls people to a sense of, complacency and then pushes forward again. So I would call it a 50-50. We saw some real signals. The big problem seems to be coming down to really when we talk about neutrality, Ukraine is going to want some sort of security guarantee for that neutrality, right? They don't want to go disarm, have Russia rearm, and come right back in. So I think that's going to be a real catching point. They're both talking about neutrality, but I think they mean very different things. So there's a lot of sticking points, and ultimately how China plays out is going to be huge. If China continues to tacitly support Russia, especially on the commodity side, this can drag on for much longer.
According to CCTV, that call has started between President Xi and President Biden. Peter Cheer, when you speak to the generals that work at Academy Securities, what are they saying to you right now about China's role in all of this?
I think the sense is that they have actually become the banker of Russia. They've become probably the banker of some of these other countries. And I do think, though, it would be a bit surprising if they stepped up and provided military support. That would maybe be a line too far. We also believe that they are probably telling Russia not to go nuclear or not to use biological weapons. So China is probably acting as a bit of a governor on what Russia is doing, but they are going to provide the financing. And kind of as I look at that, and that translates to the macro side of things, I think China is aggressively talking to people about how they can start using the yuan versus the dollar. We're all kind of keeping a close eye on what's going on with their treasury holdings. Do they do something about that? Because when you look at China as a country, they've been hoarding natural resources to kind of make themselves sanction-proof. So the treasury holdings would be the next step in that.
Lisa Shallett, I know you're all focused on the second-order effects. Any second-order effects that haven't appeared in the system just yet that you think maybe we haven't fully discounted?
Wow. I mean, that's a great question, Jonathan. Our sense is that, we're at a place where, we've talked about, the changing regime in terms of central bank policy. We've talked about maybe a new regime for inflation. And now I think we're in a new regime for geopolitics. And I think while we can certainly talk about, some of the immediate tactical things that'll come out of negotiation, for us, the much bigger narrative for business cycle and markets to begin to think through is how is this going to change spending in the West and the degree to which, we're going to see a shift of investment priorities at both a public and a private dimension in things like defense, cyber, space, security, public health, all of these dimensions in which this new quote unquote Cold War is going to be fought. And our sense is that not unlike, the 1950s, in post-World War II era, we're going to see an explosion of capital investment across sectors that's going to drive productivity growth and in many ways, higher levels of economic growth in the West.
Colin Martin, do you agree?
We could see that. I mean, we have still easy-ish financial conditions. And I think what we've seen, we're still coming out of, an emergency period post-pandemic where there were a lot of concerns about, onshoring activity, bringing manufacturing here, maybe diversifying production, things like that. And now with the situation in Russia and Ukraine, you could see a lot of corporations exploring a lot of avenues. But what we're focused on right now are just what are the risks out there and what does this all have to do with growth? When we go back to the discussions with China, I think this is important. I'm far from a geopolitical expert on Russia or China relations, but their involvement will play a role in this in terms of how long this conflict lasts. And if it does continue to prolong, that's just an uncertainty that the markets won't like. We've gotten some good news lately. We've seen risk assets bounce back sharply this week, not just in the equity markets, but we've seen a strong bounce back in the credit markets as well. But there's still a lot of uncertainty out there. So what we're telling our clients at Schwab is kind of more of a neutral outlook. We don't really have too many tactical ideas out there. We're kind of playing defense until some of the things settle.
We're going to build on the market implications through the program, throw in a little bit of Fed speak as well. We'll get to that in just a moment. You guys are going to be sticking with me, Lisa, Peter, and Colin. I want to get you some movers ahead of the opening bout, 20 minutes away. Here's Abby.
John, well, after 3 big up days for the S&P 500, in fact, the best 3 days since November of 2020, with that index gaining 5.7%, we have a bit of weakness, and it's broad-based, too. Apple falling about 0.6%, 0.7% at this point, down a little bit more than it had been earlier. Banks are lower with yields lower. FedEx down 2.4%. They put up an earnings miss on higher labor costs and worker shortages at distribution centers. And then GameStop down 9.5%. They posted a surprise loss. This stock has fallen 23 of the last 28 quarters. So if that loss holds today, or any loss holds, it would be consistent with what has happened with many of their earnings releases recently, John.
Abby, thank you. Coming up on the program, attacks continue and talks drag on.
The talks continue. Unfortunately, the progress is not that fast as one could have expected. Any talks ideally should take place in the terms of ceasefire, which is not the case currently.
And somehow central bankers have got to make a big call for the year ahead. That's next.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
If you have the serious diplomatic talks, you immediately implement the ceasefire. Just to remind you, when they started the first round of negotiations on the level of delegations, they promised to have a ceasefire. Which was not the case during first, second, third, and already fourth round of negotiations. Yes, ceasefire should be implemented immediately.
The turmoil around this story clearly fueling uncertainty around the Fed's next move. Investors gearing up for a busy week of Fed speak with Chair Powell, Governor Waller, President Williams and Bullard all on deck. Mike McKee, we've heard from Waller and Bullard already, and we know what camp they're in.
Yes, we do. James Bullard was, of course, the one who dissented at the last meeting. Chris Waller went into the meeting saying he thought Jim Bullard was right about going 50 basis points, but he did not dissent. Talk about that in just a second, but I want to show you one of the reasons why we're going to get this kind of Fed speak. You take a look at the dot plot and go over to the far left there, and you see the dot at the top. That's obviously Jim Bullard, given his comments today. But who's the one all the way at the bottom? Look how far below that is. That's 1.3% at the bottom dot, and the top dot, Bullard, is over 3%. There's a lot of disagreement on the Fed. There's disagreement in the market because you take a look at the chart there, and the light green is below the Fed. That's the market view on where rates should be. So the market thinks rates should be a little higher than the Fed this year, but they think the Fed's going too far. So how do they forecast this? Well, Bullard out this morning explaining himself, saying he recommended that they try to achieve a level of the policy rate above 3% to quickly adjust the policy rate to a more appropriate level for the current circumstances. But what are the current circumstances? We've had notes out this morning from economists, including our old friend John Sylvia, who said the market may be discounting or missing the idea that the economy could slow significantly because of the war and because COVID is still around. Next week, as you mentioned, an awful lot of people speaking. We heard, as you said, from Chris Waller today. We're also going to hear from Mickey Bowman, Neil Kashkari, and then on Monday, the big day, Rafael Bostic and Jay Powell at the NABE meeting in Washington. We'll get a good explanation from Jay Powell maybe on what he thinks should be done, and then we'll hear, as you mentioned, from Jim Bullard live here on Bloomberg Television on Tuesday, and Mary Daly from San Francisco, who will be on with us live on Wednesday. Now, the interesting thing there is they're on two different ends of the spectrum, or at least they were going into the meeting. We'll see if anybody's minds have been changed.
Mike McKee, what a conversation coming up next week. Don't you miss John Sylvia? I do. Fantastic guy. Former chief economist over at Wells. Mike, thank you. This is the story right now. Can we get that dot plot in the control room? Can you bring that dot plot up again that Mike just used? And we'll get to that spread at the front end for 2022. And look at those two dots at either end. The range of outcomes here. I mean, we talk about the median dot all the time, but there's Bullard up top, north of 3%. And as Mike pointed out, there's a dot sub 150. Lisa Shallett, the range of outcomes here for the year ahead is really, really wide. How on earth do you make a call around a story like this?
I think it's very hard, and I think it's one of the reasons why both stock and bond markets are struggling so much. I think that coming into this period of time, as we know, there were folks who had bought into this view of secular stagnation, or this belief that interest rates are stuck lower for longer, forever, and that the Fed's never going to be able to get out of its own way because the growth in the economy is just too low and deflationary forces are just too strong. And then, you've had other folks like Morgan Stanley who've said, no, this is going to be a different business cycle and we're going to break out and growth and inflation are going to be, much higher because structural dimensions and structural factors are changing, and we're more in the Bullard camp. I think that one of the things that has been difficult for the Fed, and it's hard for them to admit it, is they keep talking about how they're data driven. But as we know, back in August of 2020, they articulated a policy framework of average inflation targeting around 2% and maximum employment that had absolutely no time or dimension attached to them. So I think that, the Fed governors are looking at data, but they don't know how to calibrate it. And that's why we're getting this spread of outcomes now that we're seeing in these dot plots, because as much as Jay Powell has been good at being a good communicator to the street of late, I'm not entirely sure that he's been good at corralling all the governors around a true data-driven analytical framework.
Well, clearly Governor Waller disagrees, given the comments out on CNBC earlier this morning. Let's take the Morgan Stanley view. It's one view, we can build on it. Here's the Morgan Stanley view. This time we think peak rates will likely be higher inflation, stronger growth, should allow for a higher peak and a longer hiking cycle. Now, Colin Martin, that's one way of looking at this. Governor Waller would like rates higher. Jim Bullard of the St. Louis Fed would like to see a rate maybe above 2%, perhaps even above 3% by year end, never mind next year. Which camp are you in?
I think we're lower than both of them right now. When you consider Bullard's comments and his projection, I mean, one we know that he's been very vocal, and we saw the dot the other day above 3%. There's a lot of talk about a hard landing versus a soft landing. I think if they were to hike as aggressively as Jim Bullard would prefer, we'd likely get that hard landing, unfortunately. I mentioned this before, but a lot of it does come down to the murky outlook with Russia and Ukraine. What we do know is that leading up to this situation, the economy was strong. Waller commented on that this morning, where he said, a 50 basis, I think he said it was a screaming opportunity to hike by 50 basis points because the economic outlook was strong. And Powell's been talking about that as well. Even though he's been dovish in the past, he's pretty bullish on the economy based on his public comments. He seems to be very bullish on the labor market, and he does seem to think that the economy can withstand an aggressive pace of rate hikes. When we look at what the projections gave us this week, they gave us what the market wanted. The market was pricing in 7 hikes. The dots indicated that, and then the market repriced even higher, expecting more. But again, I do think it does come down to the situation overseas. If we get some good news there, and growth continues to come in just as expected, which was, relatively strong, maybe down from last year, that gives the Fed the runway to get to that 7 hikes this year. But we do think a lot of it does depend on that, and we have to evaluate the data as it comes in. I mean, I think they're going to be pretty open with whether they need to be aggressive and actually get that 50 basis point hike, or if they come in below the 7 that the markets are pricing in.
We're evaluating the Fed speak right now. It's kicking 2-year yields higher by 3 basis points to about 195. Lisa, you're not expecting a recession. You've got faith in the strength of this labor market. Does that translate into a more constructive view on stocks?
So not yet. And our view here has been, somewhat nuanced, but, our sense is that the stock market is still assuming that, we're going to be able to make the sales and the earnings estimates that are out there. And we're just getting increasingly concerned that those expectations for companies, as opposed to the economy, and this is really important. We often have to spend time with clients reminding them that the aggregate economy is not the same as the market. The market today is comprised of multinational, tech-heavy, which make up the largest market cap of the indexes. And our contention has been that while the economy might be terrific, the headwinds for some of these companies still needs to be discounted. So we're not jumping in with both feet, certainly in the passive indices, because we think that investors need to appreciate that there's been a pull forward in demand and that inflation is going to hit profit margins to a degree not currently discounted.
Lisa Shallop will be sticking with us alongside Colin Martin, and hopefully we can re-establish the connection with Peter Cheer and get him back as well. Coming up the morning calls and later, the rotation back into big tech. Can this year's biggest laggard stage a big comeback? That conversation just around the corner from New York City. This is Bloomberg.
SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Minutes away from the opening bell, equity futures just a little bit softer, down 0.6% on the S&P. Yields at the front end a little bit higher. Take a look at 2s, 10s and 30s. 2s on Wednesday just short of 2% at about 199. Right now 195.89. Just a bit of hawkish Fed speed, kicking yields just a little bit higher on 2s. That's the price action. Let's get you the trading diary and some morning calls. Not the trading diary. Let's get to Mizuho, upgrading Targa Resources to a buy, raising its price target from 58 to 85, highlighting the firm's fundamentals that are too strong to ignore. Wedbush cutting its price target for GameStop to 30. Michael Pagda noting the company's cash balance may erode relatively quickly. And finally, Raymond James upgrading Allstate to a strong buy, 165 price target, highlighting the company's opportunity for valuation re-rating over the next 18 months. Up next, growth stocks showing signs of life after reassurances from China and the Fed. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
24 seconds away from the opening bow this Friday morning. Good morning to you all. Coming into Friday, after the close on Thursday, this equity market poised for the biggest weekly gain of the year so far. On the S&P, up by almost 5%. We retreat, we pull back about a third of 1%. That's the opening bow. Switch out the board and get to the bond market. This yield curve's flatter. The front end yields are higher. The back end 10's unchanged at 116.55. Twos are up by almost 5 basis points now to 196, and the spread between twos and tens just short of 21 basis points. Let's call it 20 as we get some hawkish Fed speak from Governor Waller and President Bullard. Euro dollar threatening to break 110 all over again. 110 flat at the moment and negative 0.8% in that currency pair. So we're starting to see a bit of dollar strength, and crude higher just by 1.26% to 104.28. About 30 seconds into the session with your stock movers. Here's Abby.
John, well, it has been a big up week so far this week. We're looking at one of the best weeks in a while, the first up week, I should say, in 3 weeks. But we are taking a little bit of a cooling off this morning, as you suggested. Tech, one of the worst sectors. NVIDIA, not surprisingly, the big chip maker, is down about 0.3%, but well off of its pre-market low. So maybe the bulls are going to try to pull through on this triple witching day. Tesla also reversing a pre-market loss, now just basically fluctuating. Firmly to the downside, though, the travel trade, Carnival down 1.3%, and FedEx below its pre-market lows, now down 4.4%. This, of course, as they missed, investors not liking that. It's going to be very interesting to see how this day plays out, John.
Abby, thanks for that. I'm pleased to say that we've established a connection with Peter Cheer of Academy Securities. We've had to do that over the phone. So, Pete, I didn't want to go into the weekend without getting your thoughts on the broader market, because I know you are slightly constructive here, even with everything else going on. So run us through it point by point.
So, yeah, I had been constructive. I think a lot had been priced in. We were getting kind of these good news coming out of Russian-Ukraine talks. We dealt with the Fed. I think the Fed really did deliver kind of this very slow but steady pace of hikes that the market seemed to be able to absorb. But I think I would take risk off into this weekend. I think there's too much risk right now that China continues to kind of aid and abet Russia, and that's going to be problematic for markets. I think you're going to see pullback, and so I'm a little bit cautious right now. I keep thinking that we're seeing kind of the world realign, where you have these commodity-rich countries that don't necessarily have the same politics as us, that are going to start aligning themselves more and more with China. We're going to have to go to countries that are closer to us, and by closer I either mean in political values or proximity. So I think we're at this risk of separation. Maybe we'll get the all-clear signal after this 9 a.m. call, but if we don't, I think you want to pull back, take some gains on the recent bounce, and be cautious.
That's the broader risk story, Pete. I know you had some big themes coming into this year and last year for that matter as well. Does this scenario accelerate some of those themes, and how would you express that in markets at the moment?
Yeah, so I really think it does. I continue to avoid China. I think China is just separating from the world. They're delinking. I love Latin American stocks. I think we're going to see Canada, Mexico, Latin America benefit from this reshift in global supply chains, how we're going to work on that. And I continue to love the oil services space, the oil exploration. I think we are going to have to look at everything through a national security lens, and that is going to make sure that we have a lot more resources that are either in our direct control or with places that we trust, again, both by political alliances or proximity. So that to me is oil, energy, commodities, anything like that I think will do very, very well. And I really want to embrace Latin America, and I still want to avoid China.
Can we talk about the permanency of this, Pete? Blue Bay said something really phenomenal in the last couple of days. They said, we think Russia will be in the isolated wilderness for a long time to come. And this is what they said after that line. A regime change in Russia is probably a prerequisite for reinvestment for many. Now, Pete, if China got involved in this in a way that the United States would not like, are they part of that story too?
Yes, so I think I completely agree with them that people are not going to be in a rush to go back to Russia. And already, I think if you go back 3 years ago, even before the trade war and during the trade war, I think companies were already questioning what the relationship was with China. How much information, how much IP was being taken away? Was the business opportunity ever that great? And this is just going to accelerate that, and people have to realistically look at this. again, I keep bringing back, China's been accumulating natural resources to kind of make themselves sanction-proof. So I think we've got to be well aware of this. And when we start thinking about the supply chain and the cost of goods that we are purchasing, I think you have to start really accounting for that risk of geopolitical, that something happens where you get cut off or it becomes impossible to ship. So I think that's going to drive the economic decision to reshore, bring things closer.
Pete, as far as we're aware, this call between the President of the United States and the leader of the Chinese Communist Party, President Xi, is happening right now. Now, for people who aren't familiar with your firm, Academy Securities, a large proportion of that is made up of veterans, including a group of generals that I know you rely on around the investment committee. Now, I just wonder from your perspective, as you start to assess the risk that China does actually support Russia militarily, I wonder what you look for to identify the risk and what the generals are telling you at the moment, Pete. Can you share some of that with us?
Yeah, so I think one of our generals, General Robert Walsh, he was really instrumental in naming China as a strategic competitor. And that was 3 years ago under the Trump administration. If anything, I think we are seeing that there's more and more friction, and China has more and more of a willingness to be inward-looking and is shutting down. And I don't think we see military support. I think it's going to be easier for them to do the financial support, which actually that dovetails very nicely into the macro work we've been doing, where you've seen China for years push their percentage in the SDR, working on including their bonds and all these bond indices, knowing how important passive investing is in the bond world. You know, they're establishing the digital yuan for control. So they have been looking at upping the ante in terms of getting people to trade commodity futures in their currency. I think this is just going to be extending that. So you're seeing China always on these multiple fronts, what they're doing militarily, what they're doing other ways. I do think, though, when we talk to our generals, we think Taiwan is not going to be on the table. I think China is not going to attack militarily. There's so many reasons how Taiwan has changed their defense. I think they're seeing what's going on in Russia. So that, I think, is very good. On the other side of it, I think Taiwan's importance to China is going to diminish over time as semiconductor factories get built across the globe.
Pete, great work as always, buddy. And sorry about the connection. Peter Cheer there of Academy Securities. We're about 6 minutes into this. We're down about 0.2% on the S&P. On the Nasdaq, we're also down about 0.2%. The team here at Bloomberg reporting the following just moments ago. Wanted to share it with you. Russian cyber attacks have so far struggled to successfully target Ukraine's critical national infrastructure. That, according to government officials, just some reporting we've done in the last couple of moments that I wanted to share with you. For the broader market, you've seen the story. The year's biggest laggards trying to make a big comeback. Chairman Powell giving the beaten down tech names a boost after seemingly ripping off the Band-Aid. Weighing in on this is Katie Lines.
Well, John, some nascent signs of life is what I would call this, because over the last 3 days coming into today, yes, you did have those growth names outperforming. The S&P 500, of course, up about 5.7% over that time. Value was the laggard here, up just 3.9%, while its growth counterpart up nearly 8 percentage points. And of course, for the tech-heavy NASDAQ 100, the SOX index of semiconductors, the outperformance has been even larger. On the week so far, growth has actually outperformed value by the widest margin going back to November of last year. And in 3 of the last 7 sessions, that daily margin of outperformance has been greater than 1.5 percentage points. What's interesting is that we have also seen bond yields moving higher largely over that time. Well, at the start of last week, the 10-year was at 177. Today, we're in and around 216. And usually those higher yields would be putting pressure on stocks that command higher multiples. That, to be fair, though, has weighed heavily on these stocks really since the start of the year. So with that caveat, the rebound of the last few days only goes so far to cover the ground that these stocks have lost this year. Collectively, the largest tech companies have lost $1.5 trillion in market cap so far in 2020 for names like Apple and Microsoft, or 2022, excuse me. That market cap loss has been $300 billion plus.
Ridiculously large numbers. Katie Lines, thank you. Bigger than some stock markets in Europe. Katie, thank you very much. Here's the take from Credit Suisse. This is their quote. The positive market reaction to the FOMC's deliberation suggests that the markets have had enough time to digest the changed economic outlook. We note that glimmers of hope have surfaced. Lisa Shallett, I want to pick up on that line, that the Fed ripped the Band-Aid off and now you can lean back into the beaten up tech sectors. When I go through the big winners for you, focus on financials, energy, industrials, healthcare, and services. Where do those big tech names fit in?
From our perspective, they really don't yet. While certainly we've been, advocates of active stock picking, where you've got some, quality cash flows at growth at a reasonable price, we're not ready to go back headlong into, some of the high-flying consumer discretionary comm services or mega cap tech names quite yet. I think the bounce that we're seeing is a very reflexive buy the dip kind of bounce. I think that the idea that, the Fed has done its job, delivered as advertised, and, all is well, is, I think, premature to call the all clear. I think, one of the most important, but perhaps least analyzed dimension of the Fed statement this week was the discussion about the fact that, we're probably going to get balance sheet action, starting in May, or at least an articulation of the plan around quantitative tightening. Now, just to put things in perspective, remember, back in 2017 to 2018, the Fed began a program of quantitative tightening. Back then, they were able to take, roughly $700 billion off the balance sheet, and that, kind of tanked markets, if folks remember, and caused the Fed to have to reverse course. Our guess is that we're going to start reducing balance sheet, in the second half of this year, and may try to take $500 billion out at a rate of 80 billion per month. So that's a long way of me saying I think it's still to be determined how we're going to go through a period of very rapid rate hikes, 6 or 7 more this year, plus quantitative tightening, and what that really means for markets and what it really means for the economy. I don't think any of us really know.
How can you fully price something if you don't fully understand it? And Colin Martin, I don't think we've got a decent idea of the size of the balance sheet removal, reduction, and ultimately what impact that's going to have on this market. Colin, I was surprised we didn't get many questions on it in the news conference. I think we got a couple, and when they were asked, Chairman Powell was open to talk about it. He said, look to the minutes. And Colin, it just reminded me, and I've talked about this repeatedly since Wednesday, of the December Fed meeting. When you had this news conference, Chairman Powell told you everything, and then for some reason we didn't trade on it until we got the minutes. Are we going to repeat that, Colin?
I hope not. I can't remember the last time Powell told us to specifically look to the minutes. So now I really can't wait till they get released so that we can get some details. The fact that the statement offered 0, except that we'll get details at a coming meeting, but leads me to believe that we will get some details. I'm sure it was a spirited discussion, but I would expect some sort of announcement soon. One way we're looking at it, though, is once they do embark on QT, and regardless of how quickly they begin to shrink their balance sheet, that's a form of tightening in and of itself. So that's one of the reasons why going into this week, we've been less aggressive in terms of how many times the Fed can hike this year. Right now that they're telling us they will, but we're paying a very close attention to the Fed's balance sheet, how quickly they shrink it, and what effect it has on financial conditions. Because if it does tighten financial conditions too much, in addition to the rate hikes, then we can see some downside risks bubble up.
Colin Martin, Lisa Shallett, to both of you, have a great weekend, and thanks for being with us through the opening bell. This is a tough moment for this Fed and for this chairman too. When you go into the news conference, you have to somehow reflect the consensus on the committee. What if it's really difficult to form a consensus? And already what we're seeing in the early Fed speak is that you've got Jim Bullard, who wants rates up aggressively. You've got a governor of the Fed who basically wanted a 50 basis point hike, and for whatever reason, governors don't dissent, so he did not dissent. I wonder how wide the range of views is on the committee right now, and how that dances when we get the FOMC minutes. What would that be a platform for? The Hawks to sound a little bit louder, maybe? Coming up, the US warning that Russia could escalate attacks.
We believe that Moscow may be setting the stage to use a chemical weapon and then falsely blame Ukraine to justify escalating its attacks on the Ukrainian people.
That conversation's coming up. Just getting a headline that Russia transferred US dollars to settle its Eurobond coupons. That drop in just seconds ago. We're going to build on that in just a second.
financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
I have not seen any meaningful efforts by Russia to bring this war that it's perpetrating to a conclusion through diplomacy. We believe that Moscow may be setting the stage to use a chemical weapon and then falsely blame Ukraine to justify escalating its attacks on the Ukrainian people.
The situation still volatile. S&P ratings downgrading Russia's credit score and signaling more potential cuts to come. They said the following: if funds are not accessible for investors or if a payment is made in a currency not stipulated in the terms of the obligation, and we believe that the investor does not agree to the alternative payment, we could deem this a default. What is a default? What isn't a default? What we understand at the moment is the following. I want to share this breaking news with you from the team down in Washington. Russia has transferred US dollars to settle coupon payments due back on Wednesday on 2 euro bonds. You remember the amount? $117 million. This according to people familiar with the matter. The story goes on to read, the people declined to be identified because they aren't authorized to speak publicly on the issue. A Treasury spokeswoman said US sanctions on Russia don't prohibit Russia from making these debt payments, mirroring a statement similar to the one that we got on Wednesday. I want to bring in Damien Sassower of Bloomberg Intelligence on this story. Damien, figuring this out piece by piece is really difficult. I know you spent a lot of time on it Wednesday, Thursday, again this morning. Run us through what's been happening here, where we've had difficulties, and what it might mean for future payments.
Yeah. So basically the $117 million, from what I understand, JP Morgan would have never sent those funds on to Citigroup if the U.S. Treasury had not authorized it to do so. So it seems to me that the U.S. government is fine allowing Russia to pay from non-sanctioned accounts to its foreign creditors. So it's not going to block that payment. It looks like Russia is fulfilling that payment, and those monies will hit the accounts today. I think the real question, Jonathan, that we need to ask is, why on earth would Russia pay U.S. dollar creditors coupon when it's trying to wage this war in Ukraine and its economy is suffering so very badly? So the answer, really, there's three cases. There's the conspiracy theorists who think that those bonds are owned by Russians, which I apply little faith to. There's the optimists that said, look at the timing yesterday. We were perhaps in a de-escalation, and Russia said, maybe we'll buy some time here because we want to avoid default. I put little faith in that also. For me, I'm taking the pragmatist argument, the fact that if you look back to July of 2019, when Crystal X pierced the veil of sovereign immunity for the Bolivarian Republic of Venezuela, basically, the Supreme Court upheld the Third Circuit Court of Appeals allowing private creditors to go after offshore assets held by not just the sovereign, but a quasi-sovereign entity, in this case PDVSA's Citgo refining assets. And creditors will aggressively go after Russian assets offshore if the default actually is triggered. And so I think Putin's trying to buy himself a little bit of time because the last thing he needs on his desk right now are creditors accelerating the process against all Russian assets located offshore.
So, Damien, two things. Whenever you assess these things, I'll try and make them really simple. You have to assess ability to pay, willingness to pay. What we've demonstrated this week is willingness. Future ability, I think there's still a question mark. Because the first thing I was thinking of is, where did the dollars come from? Clearly not sanctioned accounts. Maybe that would be a conspiracy theory, so to speak, because I've got no idea. But clearly for some people, that's not where it came from. So my question would be, Damien, if they've met this payment, do they have the money to meet future payments?
So yeah, the answer to that is I do believe they have plenty of money that they can lean into, and money that is non-sanctioned at this point. The reality is, though, they have the willingness to pay, they have the capacity to pay, but if they are physically unable to pay, S&P and Fitch have already said that will constitute a default. If the monies don't arrive in the creditors' accounts, that is a default. So really, at the end of the day, Jonathan, what you're saying and what you're hitting on here is the U.S. Treasury can actually force Russia into a default if it chooses not to approve the money transfers. And that is exactly where we are today. It's a very slippery slope.
And that point's the point I want to build on, because S&P lent on this. They were a little bit more subtle about it. They said if the funds are not accessible for investors, isn't that another way of saying even if sanctions stop the pipes from working, even if you try and send it, if it does not reach the end investor, we're calling that a default?
Absolutely. The sanctions are of Russia's own making. And so the rating agencies are going to constitute it a default if, they just can't move the money across borders and get it to the creditors that are owed it. And so that is really where we are. It's an unprecedented time, Jonathan. Capacity and willingness to pay, but still may go into default because they're just unable to pay.
We're learning things about the sovereign and how these payments will be made, how we'll process. That's one thing. The second point for me is the corporate story. Damien, is there a different thing happening here? What we've seen from the sovereign and what we've seen from corporations?
So corporations are in a very, very different, so they basically can't really make payment. You've seen Yandex trying to approach creditors to restructure. In fact, in Servicetel's case, they're saying that the U.S. government may not, for whatever reason, allow them to make payment, maybe because the cash is held in a blocked account. So there's a lot of piping and logistics to go through, but it seems to me that OFAC and the U.S. Treasury are firmly on top of this and talking very, very closely with JP Morgan and Citigroup, in order to ensure that whatever monies are paid, they're not monies that have been sanctioned, that are held as war repatriations for the people of Ukraine and for the rebuilding of that country when and if this all ends.
Is there anything about this story that gives you confidence about this asset class, this world, Russia, or anything attached to it?
Jay Newman, former Elliott, pointed out yesterday that this could be the beginning of a 1980s-style wave of sovereign defaults. And that's for a very different reason, not tied to what's going on here in Russia. If that does indeed occur, it's because these economies are weak and they've gone into, they have huge debt levels that, quite frankly, I don't see how they're going to pay it off. So, they're going to keep pushing the can down the road, but eventually the rubber is going to meet the road, and in a rising rate environment where financial conditions are tightening, the real risk here is that you're going to see a wave of sovereign defaults along the periphery in EM. And, I don't personally call that my base case, but yeah, it's certainly a risk, and I mean, it's a possibility.
Damien, this was perfect timing, sir, and thank you for the hard work to help me understand, all of us understand, what on earth is going on with this story. Damien Sasser there of Bloomberg Intelligence. According to the team down in D.C., according to people familiar with the matter, Russia has transferred US dollars to settle coupon payments due back on Wednesday on 2 euro bonds. Coming up, finally, we'll get to the training diary and get you to the weekend. From New York City, this is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
So we are 26 minutes in. Equities are basically dead flat on the Nasdaq, down about 0.2% on the S&P, but some fascinating things are happening in the bond market. Switch up the board and get to treasuries. Threes aren't on here, but we're starting to see the curve slowly invert. Sevens above 10s, fives above 10s, threes above 10s. Two-year yields just short of that, 195. A break of 20 basis points, the spread between 2s and 10s. That's the story in the bond market. So if you've got a constructive view on equities right now, look to bonds and maybe ask yourself whether you can tolerate what's going on at the moment. As the price action, your trading diary looks like this. The Fed speak from Barkin Bauman later. The Fed speak continues into next week with Chairman Powell and Bostic on Monday. Williams, Daly, Mester all on deck on Tuesday. We'll hear from ECB President Christine Lagarde and get some data in the mix as well. From New York City, this was the countdown to the open. Enjoy the weekend. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Connection lost.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi-Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the street, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired 2 consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, But he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be a ploy by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was a native German speaker, but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Wienergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Wienergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth. And we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small and, space is really big. And then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away. Because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it and I just watch it until it stops going up and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers. One of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities and the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people like want to unpack that. And so my audience is a lot of them are younger investors who are looking to hone their skills.
Tech in right up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly, this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwit, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, The hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price, before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350. Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, Google in the morning, and marching trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The U.S. connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. While that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud, or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted, and that are just going to be a much bigger challenge for small business owners in rural areas.